So the pamphlets or the booklets that you all got here for the first time home buyer seminar, they're in order of all the slides for each separate speaker. However, it'll be presented in a slightly different order, so you might have to go back and forth a little bit. So the first one you'll see are all mine. The second group is all Sheeta, the mortgage broker, then Rami, the inspector, and then finally the lawyer. So who am I? Well, I'm the founding member of Serge Bourgoin Associates. I've been a real estate advisor since 1985. So I've been doing this for a bit of a while, I guess. I'm a member of the RE/MAX Lifetime Achievement Award. I was with RE/MAX for 31 of those years. I'm also a member of their Hall of Fame, and I was executive club member for them, 100% club member, platinum club member, Titan club member. And in 2017, RE/MAX awarded me 30 years service with them. I joined EXP in 2018. With EXP, I'm what they call an icon agent, which is kind of pretty much the top 1 to 5% of all the agents. I'm also an honors graduate of the Canadian Securities course, and I am an honors graduate of the Professional Financial Planning course. That's the course that the Canadian Securities puts you through for financial planning. And of course, seminar speaker. So the first step in buying a home is getting a pre-approval, right? So what we're going to do now, I'm going to ask Sheeta to come down and speak to you about the whole mortgage process and getting pre-approved. I'm just going to need to open up her presentation here. That's this one here. And slideshow play.
Good morning, everyone. Welcome. Well, thank you for making it out this morning on a Saturday on this cold. Well, it's not that cold, but just thanks for making the journey here. So when you're thinking of buying a house, right? So you're thinking of buying a house. So congratulations, you're going here on this journey. Before you go shopping, first thing you need to know is you need a budget. You're like, well, you need a target. You need something to kind of bring yourself in. Otherwise, right? Like there's no guide to what you're looking for. So that's why talking to the mortgage broker is important, because it's like I set the parameters. I set you, I give you an idea what your budget is, right? And we can kind of go through just giving you an idea how what's gonna cost you before you decide that you're gonna go shopping with Serge. So so Serge mentioned my slides are in the book if you want to go through it with me. If you guys want to find the page, you can jot some notes down. There's gonna be a lot of information that you're gonna get today.
Keep going.
So it'd be nice to be able to have the book to go back to and what
You got to keep going. So you stepped out of my section.
Yeah.
Keep going.
Keep going.
There you go.
It wasn't in
that
order.
page right there.
Yeah, it wasn't in order, so when I was looking through it myself, but yeah, all the slides are in there, so there we go. That's fun color page here. Okay, so we'll go to the next slide here. Okay. What is a mortgage broker? So, you want on the slide? My former career was a teacher, so when I look at the students, like, okay, let's look at our slide, get to our page. I'll wait for all of you. Okay. Second page. Perfect. So, a lot of people, like the consumers, like, they don't know what a mortgage broker is, right? And a lot of times I come to, clients through the Realtor. The Realtor introduces the mortgage broker, but often when people think about buying a house, I need some money, where do they go? Their bank. Whoever your bank financial institution is, you go set up an appointment and think that's the only option. The mortgage broker, myself, so basically the other option is talking to myself, the mortgage broker, where I don't work for one bank. I'm licensed to to help you get a mortgage through TD, Scotia, ATB, Service Credit Union, National Bank, lenders that you don't even know that exist because they don't advertise to the public. They advertise through the mortgage broker like myself. So that's this. So as a mortgage broker, so I'm the option where I have, I can get you a mortgage through multiple different lenders, right? So I shop different lenders, gives me options. No cost using a mortgage broker. It's the lenders that compensate me for my time, right? So I do the same work as that banker that you would have gone to at your bank, do the application process with you, and then that banker would give you their rate, their products and whatnot, and you don't know if that's good or not because you haven't shopped around. Whereas I will do the same process of sitting down with you, go through the application, but then I can say, hey, by the way, like, what's your objective? Do the best interest rate, the ease of maybe moving your mortgage to a different property if you decide to move, or what is your priority? And then we choose that lender based on what suits you, because not all banks have the same, obviously not the same rates, right, and the same kind of product. So that's where it's I give you choice, result based comp. So basically, I work weekends, I work evenings because it's performance based. I don't get paid a salary. So if you need an answer by 9 p.m. Friday night, guess what? I'm working 9 p.m. Friday night, right? So, and I specialize so mortgage brokers only do mortgages, meaning that banker could be doing like personal credits, the investments, mortgages. So that's more, like this, they know the tidbits of everything, whereas I just strictly do mortgages. So mortgage brokers only deal in mortgages. So then we specialize. So we know all the lenders, all the lender products, insurer products. So strictly just very, very, that one specialty. Okay. So that's what a mortgage broker is and how we're different from a banker. Myself personally, just like I said, a background in education. Because I've been in the industry for 10 plus years. I basically, have learned all the different types of lendings, and I'm also investor. So I have some investment properties. So if you ever feel like you want to go into that area where you want to also pick up some real estate for your retirement portfolio, I'm someone that I can also say, hey, listen, like, this is my journey. Let me help you go through the process as well. Okay. Step one of getting pre-approved. Purpose, obviously, a budget. You need a budget. Right? You need to know what kind of home that is realistic for you. And then on an interest rate increase climate. So let's say back in 2022, 2023, we had hyperinflation, but inflation rates were climbing quick. So when I do a pre-approval for you, I get to lock a rate in for you for 120 days, for 4 months while you shop. If rates are climbing, that rate is guaranteed, right? If rates drop in that time between you looking and then you taking possession of your house, we can ask for a rate drop. So getting a rate locked is always good so that, it protects you from, increasing rates. And there's no disadvantage because if your rates do get, go lower, we'll just get you the lower interest rate, okay? On a decreasing rate, we don't typically do a rate hold, but if clients want it, I can offer it. My process is I have clients go through an online, so everything can be done virtual. I don't often do in-person meetings, so everything's done virtual online application. I'm collecting documents. So the thing is, I'll go to the next slide.
You have a text message.
Kind of outline, yes, the 3 things that we look for. So I need documentation on credit. Well, credit, so I'll pull the credit bureau. Don't worry about that. I need income documents. I'll need down payment documents. Okay, so the size of your mortgage. So basically, obviously, the payment, your mortgage payment, it's your income has to sustain that mortgage payment, and that's hard to determine the size of your mortgage and ultimately the size of your house. How much do you make and minus the vehicle loan. So the actual calculation is income minus whatever debts, if you have car payments, if you carry a high, interest credit card balance, student loans, I have to take that off of the calculation, and then what's left over is what you qualify for. So if situations where I have clients where, they've got a car payment, maybe sometimes it's a good idea to pay out that car payment so that I can, do you know what I mean? That I can just now, that doesn't go against your ability to qualify for a bigger mortgage, right? There's options to wait, if I've got a client where that payment, that $500 vehicle payment, can actually up your mortgage amount by 80 to 100 grand.
Mm.
It's because a vehicle payment, $500, your vehicle is amortized, so the life of your vehicle loan is 5-6 years. I know I've seen 7 years now. The life of your mortgage could be 25-30 years. If you take that $500 and stretch it over a longer period of time, that's the reason why you can get a higher mortgage amount. Okay? Because it's just it's that amortization. Down payment. So I'll go through this, and I think I'll go through. I need income documents and down payment documents. Those are the two types of paperwork I'm always looking for, what the lender needs to confirm. So down payment, owner occupied. So it's your primary residence, 5% down. There's a lot of misinformation or confusion about like first home, second home. Even if you're buying your second home and it's gonna be using it as your primary residence, and you decide to keep this, your existing home is a rental and buy a new house, right, to live in, it's still 5% down. Because the purpose of your new home, it's what you're using it for. It's not that it's your second home. It's always based on, are you using that for primary residence? It's 5% down. If you want to buy a home strictly for investment, it's 20%. 20% down. The different ways so now the government's rolled out some programs. It's for different ways to save up your down payment. So the first home savings account, it's $8,000 a year, up to $40,000 for the entire amount, right, towards the down payment. And it's a great program to utilize, especially because I don't try and think with an RSP. Does anyone know how an RSP work and how it's deducted off your income? Oh, maybe we're not going to go into that then. I'll just tell you about like these programs where it's the first home savings account, TFSA, $7,000 a year. RSP, you can withdraw $60,000 a year. $60,000 per person. So a couple, it's up to $120,000. Or down payment can come from gifted from family. Okay, so different, or your own savings. I don't think I added on there. So saving the 5%, and then don't forget the closing costs. So the closing costs are, because you'll talk to the lawyer, so you'll need a lawyer to close the transaction, inspection. So in this first time home buyer seminar, you can meet the professionals that you're going to be working with, and that's part of the closing costs, right? It's to pay for that, for all the other professionals that you're going to be using. Okay, so we always, the 1.5 is that's a lot, right? But if you're thinking of someone buying a $200,000 house, right? That's $2,000. Your legal fees you'll see the legal fees is listed on your folder there, right? So that's why it's based on, even though it's percentage, obviously on a $500,000 house, that's significant. But some home sizes are smaller. But this is a good kind of estimate of how much you can save for closing costs. Income documents. So kind of like it's already listed here. I'm not going to go through every single slide and read it. I know you guys can do the reading, but typically these are the requirements that I need for income, depending on what your income type is: salary, hourly, self-employed, self-incorporated, and sole proprietor. Do you have any questions? Sure. Go ahead.
Do we have to take CMHRC insurance if we are putting 5% down?
Absolutely. Okay, so I didn't do a slide on CMHC, but I'll just I'll verbalize it. So CMHC is a government default insurance, okay, that you need to pay if you put down anything less than 20% down. Okay, so essentially it's just it's not part of, so your requirement for down payment is that 5%, the minimum 5%. The lender they'll loan you that money for the insurance premium, right? And then so basically that amount goes to the government as insurance for not having the 20% that typically banks are comfortable banks will lend up comfortably up to 80% without the insurance. But if you want to only put 5% down, they need that government insurance to ensure that anything happens when you're delaying your payments and they have to foreclose. The insurance protects the bank. It is the insurance that you pay to protect bank, but that allows you to only have to come in with less than 20%. Does that make sense?
Yeah, so lenders put in that amount, right?
The lenders will. You borrow that amount. So any banker or mortgage broker who can put together a deal, they already know. The question I always ask, like, what's your down payment? It's 5% down. I already know the premium that I have to include. When I quote you a payment, it's already CMHC premium included. You're not doing calculations.
Yeah, it forms part of your mortgage.
Yeah, it's already part of the balance and the mortgage and everything I quote. Okay? Credit. Okay, so credit's something that you don't need to do anything because it's a broker that pulls your credit, but I just want to kind of show you what shows up on your credit. Okay, it's the names, right? Names, addresses, employment. It's pretty in-depth, right? Your active loans, some collection items. So I always say, anytime you have a collection item, keep the receipts for everything. Like, keep the receipts for collection items. Keep paperwork. If there's any foreclosures, keep your paperwork. Marriages, divorce, keep all that paperwork, because when Equifax collects all this information, if there's an error, and it's very common, it's actually pretty common for Equifax and TransUnion to have errors on their report, you need to have documentation we can send in documentation to kind of correct it. So if there's any collections that was paid out, but it didn't update on the credit bureau, show me the receipt, we'll send it into TransUnion Equifax, then that gets corrected off of your bureau, okay? So, sometimes this stuff does come, like the names, some of the aliases sometimes, because of I guess if it's your SIN and your name, it might cause an error if someone else has the same name. Maybe the same birthday, if it's common, right? So, yes.
Just for people to know, if they have to go through the process of trying to fix their credit bureau because there was an error, typically, what's your experience? What kind of timeline does it take to get that?
Oh, good.
It can take a while.
A long time for Equifax to review. Equifax and TransUnion understand that they have a monopoly in this industry. It's not like they're not beholden to the consumers. They're Equifax, the main credit reporting agency, right? You have no other recourse. That's the one that we use, and it could take, through a mortgage broker. That's why when you talk to mortgage, we have our channel. My channel can be a couple days, right? But that's where consumers have gone and done it themselves. Could take weeks. And in a time, that's why we do the pre-approval process. It's important to do the pre-approval process before you go shopping. If there's an error and it affects your qualification, we need that time to remedy it. Because the worst thing you can do is go shopping, have your heart set on a property, next thing you know, I pull credit and there's an error and we can't get past that. So then you gotta walk away. Okay, so that's why the pre-approval process, we look through all this, make sure it's correct, and it doesn't impede on your ability to buy. So once I do the pre-approval process with you and I say, hey, congratulations, this is your budget. And then what I end up doing is saying, hey, call Serge. It's time for you to go shopping. So then Serge takes you shopping, and then you find a house, you love it, and then you're going to write up on the property. So I step back in. So I do the pre-approval process, at least giving you an idea, giving you confidence that you can write an offer and things look good. I have got all your paperwork. Then you spend the time with Serge. It could be a few days, it could be a few months, but then it's when you have a written offer that now you and I are working again. So I come back and say, okay, we've got this contract. Now we are given, 10 days for financing. So in that contract, it stipulates that you need to get financing in place in 10 days. And now you and I are, we're working together again. So I submit the application, and this is what the lender is doing. So the lender is all the documents you've given me. If there's anything, I'll ask for updated documents if it's been a while. The lender will call your employer to confirm your income. Property, the lenders will check, I guess on the MLS, ensure that what's written on, I guess the description on the property, because if you're buying a foreclosure, depending what they write, it might, trigger an appraisal. So the review of the property, income, down payment, where they're looking at the sources of all the deposits in your account for the last 90 days. Okay, so if you're buying a house, please don't, if you're moving money around often, in the 90 days before you buy a house, try not to move money around, right? And if you are moving money around, please have a reason and kind of jot down, like e-transfers typically have names, but when there's cash deposits or whatnot, please jot down where it's from, because without lenders, they will scrutinize all those deposits that are in that 90-day statement. But we have to, there's banking, anti-money laundering guidelines that we have to meet. And so to ensure that any money going into that home as a down payment has to be sourced. So mortgages are highly regulated. And so these documents have to, right, just ensure that what the documents we provide is definitely being scrutinized. And then, we end up signing the mortgage documents. Once everything's approved, it's a contract with the mortgage lender. These are the terms, these are, the payments. You're signing on to a 3-year term, 5-year term. So we end up signing the mortgage approval at this time. Okay. And then once it's like, mortgage is approved, right? So typically mortgage is approved. Then after that point, it's time to pack. It's time for you to pack. Because once the waive condition, the mortgage is approved, it's like we tell the sellers that, yeah, we're ready to, let's waive the conditions. And then after that, typically, possession could be within 30, 60, 90 days, right? So, but in that period, you and I, again, I'm done with you. It's the closing process. It's when you're about to get your keys is when you end up signing at the lawyer's office. And you're typically signing at the lawyer's office because you'll talk to the lawyer the week, a couple weeks right before you take possession. So if it's not for a few months, then you have all that time to pack and you're really not talking to a professional, right? Until the closer to when you're getting your keys. And so you and I are done, but I'm in the back overseeing the entire process because I'm in contact with that lawyer. That lawyer, when that mortgage document instructions hits that lawyer's office, if they have question, it comes back to me, the mortgage broker. So anytime it's, I am a part of your process until the day you get your keys. If that money doesn't show up at the lawyer's bank account on the day of key release, call the mortgage broker. I'm back in there, involved again, on the phone, calling my lender, where's the money, right? People outside waiting for, key release. And then once you get your keys, aftercare service. So my hopes is that for the life of your entire mortgage, 25, 30 years, you and I are going to have a relationship. We're going to have a relationship because your mortgage doesn't come up for renewal every 5 years, 3 years, whatever your term is. I'm back in your life walking you through the different stages of, right? Like let's renew your mortgage. And what if at that time you're deciding, you know what, we're going to upgrade our house. Okay, so let's talk about maybe transferring mortgage into a new property. So our relationship doesn't end once you get your keys. It's for the entire life of the mortgage, when you move, when you're upgrading, or when maybe if there's, you got into a big money spending era and your house is your equity, like the equity in your house, you can access that to consolidate debt as well. When you buy a house, it's an asset that you can borrow against. It can now be a tool for you to take care of your finances and a part of your financial future plans. Okay, so that's why it's not just a transactional, so it's a relationship. So yes, so you're signing up with me for 20, 30 years, guys. So
Sheeta.
Yeah.
One thing that maybe sometimes people see and hear think about mortgages, and they go, I don't understand the difference between an amortization and term.
Oh yes, sorry, you're right. Let's go back. With your mortgage, your mortgage is it's a loan, right? Let's say it's a $100,000 loan. So when I say the word amortization, it's the life of the entire loan, right? So how long is it going to take for you to pay off that $100,000? We can stretch that loan amount to 30 years, right? Amortization means the entire life. But your contract, every time you do a mortgage approval, your contract with the lender will only be 3 years, 5 years. That 30 years gets spliced into 3 to 5 year terms, contract terms, because we have to renew it. Because rates are only held in Canada, actually. Rates are only held, right? Your mortgage contract is only held for 3 to 5 years. I've seen 10 years. No one's saying 10 years because rates are way too high, right? But you're taking these shorter contract terms, right? And eventually, like I said, but the entire life of the mortgage amortization is the entire life for you to pay off. So when you're mortgage free, it's at the end, and I come into your life every 3 to 5 years as you're trying to renew or do something with your mortgage. Yes.
Fixed rate versus variable.
Oh yes, fixed versus variable. So the difference in your mortgage contract, there's different ways of how you can choose your interests and how the interests and the types of interests. So the types of interest is in that, let's say you decide to, get a 5 year contract, take $100,000 on a 5 year term. That's a 5 year contract. You can choose to take a rate that is fixed, meaning that rate will be the same for the entire 5 years. It's slightly higher than what would be called a variable rate. A variable rate is different. It's slightly lower, but it can float. It floats based on Bank of Canada and their announcements. They make announcements 8 times a year, and depending on the economic health of Canada, they can choose to increase their rate or decrease their rate. And your rate on a variable floats with what the Bank of Canada decision is. And so it is slightly lower, but it's riskier. It's riskier. I know even like utility, you can choose to have your utility on a fixed or a floating. Same thing with variable, like a mortgage. It's a fixed rate over the 5 year term of the contract or variable. So, right? So you have that option. First time home buyers, I always say, hey, listen, historically, variable has saved, more money. Historically, over a span, like if you look at history over the last, 50 years, you're right. Theoretically, it does. But as a first-time home buyer, because this is a 30-year journey, guys. Your mortgage is, life is 30 years. In that first 3 to 5 years, you're buying your first house. Let's fix it first. The reason why I say fix is you're getting into a new house. Get yourself settled into home ownership. You're gonna be spending a lot of money just to get your house into a home, right? Personalize it. So let's just fix it. The next, you have the opportunity where you've been a homeowner for 5 years, and the next time we renew, you get to choose fixed or variable in that next contract. Maybe consider doing variable because now that it saves you money. Let's give it a try. What does the economy look like? What do you foresee it to be? No crystal ball, but if you're feeling confident, it saves you money and you have some, extra money in the bank account to weather the highs and lows. Let's do that for the next 5 years. Right? So these opportunities to change.
Oh, sorry.
Yeah, go ahead.
Yeah, so are you saying like for the first time home buyer, the interest rate is better than the variable?
I always advise the fixed just so that because you know for sure what your payment is for that first 5 years.
Oh.
It will not change.
Oh.
You're not going to lose sleep. So it's just to me, it's more your emotional and mental health. You're not going to lose sleep if the payments go up.
Oh, okay.
Do you know what I mean?
Yeah.
Right? So yeah, that's why and when I say the rates are, the interest rate is slightly higher, you're probably looking at maybe a $10, $15 a month difference, right? Like it's not going to completely break the bank account. But again, everything with mortgages or, debt, it's the amount that you save over the years. Over the years, that's what makes the difference, right? Yeah. Any other questions?
So suppose you want to pay off the mortgage less than 30 years. What are some of the things you could probably do to pay it in a shorter space of time?
Absolutely. So I guess the most common way and the way where you don't even notice the difference in your own day-to-day budgeting is choosing a monthly payment frequency, paying your mortgage once a month, or paying your mortgage every 2 weeks. Consider this. There are 26 bi-weeklies in a year, so there'll be 2 months that you have 3 payments. Those 2 additional payments that you're putting into your mortgage over the span of your mortgage matters. You can take your 30 years by doing bi-weekly And the payment difference of biweekly and monthly, you're probably thinking, you know what, it's like $50 difference, right? It's a very small amount. But over those years, it can save you, like over 30 years, you can be mortgage free in 27 years versus 30 years. You save yourself 3 years. That's huge, right? But you don't know this difference in your day-to-day, like, household budget because it's just a small change. Okay, so that's one. So biweekly frequency, making a biweekly accelerated payment versus monthly, that's the easiest. Or you can put lump sums into your mortgage. Every lender and every bank will allow you to put extra payments into your mortgage to pay down the principal. The faster you pay down that principal, because your interest is charged on the outstanding balance. So if you're chunking that, you're putting lump sums towards your mortgage balance, then that mortgage gets paid down faster. Like that 30 years gets, stretched down to, again, depending on how much you put as a lump sum. So you can utilize the lump sum, change it to accelerated biweekly payments. What are the other ones where I'm feeling? Yeah, you can actually, so the lump sums are like, you can call the lender and say, hey, you know what, in my next payment debit, take out an extra $5,000, take an extra $2,000, but you have to prompt them. You're prompting them. And a lot of lenders have online portals. But you select the online portal every time they want to do a lump sum. There's also an ability to do increased payment. It's like a set and forget. Can you increase my payment by 15%? And then you know that every single payment reoccur, like it'll continue to reoccur, the set and forget. So that's another way to pay down your mortgage faster. Just increase your payments. Okay? Yeah. And every time that you have the contract end and renew, if let's say you're up for renewal, and because every lender, the lump sum is maxed out, you're allowed to pay 15% annually or 20% annually a year. Sometimes like on a $300,000 home, like mortgage, that's $60,000. That's big, but what if you come into a windfall, you have an inheritance, and now you've got $200,000? If you're only allotted $60,000 that year, right? You gotta wait till the year rolls over, or you just pay like the penalty on the overage, right? But you can definitely wait until the year rolls over and you have another $60,000, or you wait until that term is up. Remember that contract you did that when that term's up, it opens you up to do whatever you want. You can end up paying it all off, or put all the rest of the lump sum in and only carry the balance forward. Right? So it's like when that term ends, that's why I like that the term ends, because now you can redo your mortgage if you need to add way more money. You can take out money. So it's an opportunity to to make changes.
Is it after the 5 years?
You can choose a 3 or 5. It's up to you if you choose a 3 or 5 year term. So how I always do it with clients is, the question is, when you're buying a house, my very common question is, okay, so what's the plan? Do you want to be in this house for the next 3 to 5 years? If a client says to me, well, no, this is going to start at home and be really, we're thinking just 3 years. Yeah, let's consider looking at a 3-year term instead of the 5-year term. Or someone says, hey, listen, like, I've got to found my kids. I want to raise my kids, and I never want to move again. Like, this is going to be their home. There's an elementary school around the corner. There's a junior high. This is my home for the next 20 years. Okay, let's take the longest term that we can take, right? So then that's why we can tailor it depending on your decision of how long you want to stay in your home. Okay, you had a question?
Yeah. If a gross family income is 150,000 annually, how much that family is eligible to? What type of housing budget that family has?
On 150,000. So yeah, so we do. So when we're doing an application, we go up to 4 people on an application, and it's a household income, right?
Yeah.
So we just say all the people on the mortgage household on $150,000. I'm going to calculate that right now. Like, I should have done a slide on like how much that, just to give you an idea. You know what? Just off the top of my head, and I remember I just ran this number recently here, on a $60,000 income, I remember getting a mortgage amount of, was it $300,000 on $60,000
So
income a year?
So 5 times.
No, then the double. So doubles 120 and then add a little extra. So there's, I would say, 8? Just off. I'll run a specific number. How about at the end? If you were like, that's a very specific question. At the end of everyone else's presentation, what I'll do is I'm just going to maybe do some income amounts and what mortgage that equates to, and then I'll verbalize it to you if you guys want to write it down. Is that good?
Yeah.
Okay. quite a little bit. Can do that. Any other questions? Do you guys, well, you have my phone number. Yeah, you have all my information here. Would love to hear from you guys. Listen, my time, I'm not a lawyer. I'm not clocking in. I'm not clocking out. My service is for you. Utilize me. Call me. Right? Hey, I've got questions. A lot of people say, like, I don't want to bother you. I'm like, you're not bothering me. I actually want you to call me. Please do. Please do. Don't be worried that you're taking my time.
Question, I just want to clarify it, like when you guys say like the pre-approve process,
Yes.
like how does it work? Because like I'm kind of new, I'm not really
Yeah.
sure. Yeah.
It's like the application process. So the
Oh, okay.
pre-approval is me taking it, you and I having a conversation, and I'm taking your application, and I'm qualifying based on the paperwork you send me. I say, hey, you're pre-approved, meaning here's what your income can qualify you to go out and shop. If I say get your pre-approved for 300,000, guess what? That's your budget to go shop and find a 300,000.
Oh, okay.
Okay?
Yeah.
So Cheetah, just one more quick question.
Yeah.
Is there a difference between pre-approved and pre-qualified?
Absolutely. Absolutely. So it's the verbiage, the mortgage industry. If you're pre-approved, a pre-approval means we've collected the documentation. We have done the due diligence to make sure that, like the documents that you're gonna need, we're confirming income, right? If you provided documents, that's a pre-approval. Pre-qualified, I can run numbers. You know what? You can verbalize to me all the information that you have. Yes, my income's 100 grand. You can tell me, I can run numbers based on what you tell me, but it's not pre-approved because you didn't send me any documents. Then you're just qualified. I'm just giving you a quote. A pre-approval means you provide the documents. You say you make 100 grand, then you show me a T4 for 100 grand. But oftentimes, and this is why the mortgage is like you go buy a house and it falls apart. It's because you were qualified, not pre-approved. The person ran numbers. Your paperwork came in and you forgot that, hey, you know what, that was the year that I took some time off. That was the year I didn't work for a couple months. Okay, that matters. And we didn't see the documentation, right? So then that's why there's a discrepancy between, sometimes people at the end, put an offer in house and it falls through because the paperwork wasn't vetted upfront.
Thank you, Cheetah.
Just one more question.
Oh, one more question, okay, for sure.
So I got pre-approved for my mortgage,
Yeah.
and it's valid for 120 days.
Yeah.
You said, right? I am unable to find a house in 120 days.
Yeah.
So what does happen?
You can extend, renew it.
Okay.
So that 120 day, that rate will expire. If the rate remains the same, then we'll just extend for another, like that rate will now book a new rate.
Yeah.
It's the same rate, extend for another 120
Is there a
days.
fee for that?
No fees, no. The mortgage broker, you're not paying a fee for the mortgage broker,
Okay.
okay?
Thank you.
You're welcome.
Okay, so
Should I take a lot of time?
just so that you understand how important it is to get pre-approved before you go shopping. If you go and find a home and say, oh, we found it, we're on an offer on it. First thing that the listing agent will ask me is your client pre-approved? And if you're not pre-approved, they may not even consider or look at your offer. Okay? If you're happen to be in a situation where we get into bidding where more than one buyer wants to buy the property, right? And one's got pre-approval and one's not, the one with not can offer higher than this one with pre-approved. They'll still take the pre-approved offer before they'll take a higher offer, even if it's higher, even though you're not pre-approved. All right, so pre-approval matters, right? And also, it makes sure that you're looking at the right kind of properties. You had questions, I can't remember, I think it was you, about paying out early. Okay. So there's, of course, like you should mention, you can increase your payments by 15%. You can make lump sum payments every year. As an advisor, I've been in this industry for what, 40 years. I was also a financial advisor and a stockbroker for 10. And I will tell you, don't do that. I'm going to give you a different option. Instead of increasing your mortgage by 15% or making a lump sum payment for 10 to 15% of the mortgage, I want you to take all that money and put it into your RSP. Now that RSP, by putting that money into your RSP, That's going to generate you a tax refund. Take that tax refund and put that against the mortgage. Because what's going to happen at the end of the 20 years, you'll have much higher net worth and retirement savings than if you had paid the house early and put all that money towards your RSP later for your retirement savings. You will never have as much money at the end of the day. So, for me, a better strategy is put that into an RSP, get a tax refund, take the tax refund, and make your lump sum payment against your mortgage. Okay? That's my 2 bits on that topic. Okay. The second step, of course, is choosing a real estate professional to represent you in the search of your purchase of your new home. Hopefully, you decide I'm your guy. Okay? You don't typically have to pay a fee for me, right? We, as realtors, are paid by the seller. It's very rare that you might be responsible to pay your realtor. And I can tell you that in my 40 years of doing this, I've never had one of my clients pay for my services. It's always paid by the seller. Okay, so yeah, in your book, you have to go back through my slides. Yeah. Come on, no, that's not what I want. Let's go back here. Where's my mouse? I lost my mouse. There's mine. Make sure that you choose someone that you're comfortable with and that has the experience to properly represent you and help you negotiate the best deal. You know, a lot of realtors are part-time realtors or have been in the industry for a long time. They don't know all the tricks in negotiations. And you know, a strong negotiator, if he knows what he's doing, can literally save you thousands by the time to negotiate and buy your property. Have an initial meeting with your real estate agent. I 100% say this, to me, should be mandatory. Meet with your agent, get to know him. Also, he gets to know you. Make sure that realtor finds out what your real estate needs are. So now we're going to talk about agency. Agency, and you'll find it at the back of your package there. There's some forms that you'll normally have to sign when you're dealing with a purchase. One is called agency. The second document that's there is the exclusive buyer representation agreement. And the third document in the back is a copy of the first, an offer. So, agency is, you know, no matter who your agent is, make sure that they thoroughly explain it to you and you understand it. Okay? What are your agent's legal obligations to you? That's where that comes in. So let's talk about that now. So it's actually a regulatory requirement. Any client that I work with, I am supposed to explain agency to you, and you have to sign a document that you understand what agency is. So there's different types of relationships, common law or designated agency. So most of the real estate agents and real estate brokerages in the city are what we call designated agency. There's still a couple that are common law. In a common law brokerage, what happens is that any information that you may share with me in private, right? I have the ability and I am allowed to share it with everybody in that office. Every agent can know your information, has access to your information. Under designated agency, no, I am not your designated agent. I'm the only one that gets to know any information you've shared with me in confidence. All right? So, you know, when I started, every agency, every brokerage in the city was common law. I think it wasn't until about the last 20 years that designated agency started to come out. And, that's where actually the government, they pushed for that to happen because they wanted to protect your interests and your confidentiality. Customer or client? This is the one that confuses a lot of people. You can be a customer or you can be a client. Well, as a customer, we're going to talk about responsibilities to you, the buyer or the seller. As a customer, I have no legal obligation to you whatsoever. I cannot give you advice as a customer. Sounds strange. You go, geez, I'm your customer. Why can't you give me advice? Why can't you, represent me and have legal obligations? No, I don't have obligations on it, and I'm not supposed to give you advice. I can share with you statistics. I can share with you, here's all the sales, here's what's on the market, but I can't advise you or give you advice. That's what you have to understand. And if you're going to want to be a customer, actually, you have to get you to sign a form that says, I'm not representing you, you're a customer, not a client. You can become a client. When you become a client, now by law, I have legal obligations to you, and I now can give you advice. The third type, which is not here right now, is transactional brokerage. That's been called many different things over the years. Some people know it as dual agency, and it doesn't happen all that often. That would be a situation where I may end up representing both the buyer and the seller. And ultimately you end up being somewhere in between a customer and a client. Anything that you share with me in confidence, I can't share with that particular seller in this case. And whatever they share with me in confidence, I can't share with you. So let's just say the property's listed for $400,000. You write an offer for $380,000. So yes, sir, we like the house. We want $380,000, but we pay $395,000. We really want this house, but we want to start at $380,000. Well, I can't tell that seller that you want to go up to $395,000. Now that we get that offer, I present to that seller. He says, "Well, no, that's kind of low. I'm going to counter them back to $395,000, but I would go to $387,000. Well, they're going to give you that counter for $395,000. I'm coming back to you. I can't tell you that he would accept $387,000. Okay? I just follow your instructions at that point. I become Switzerland. I become neutral. I can't be biased one way or another. That's transactional brokerage. Those are three types of representation that are important that you understand, and that's that document in the back that says consumer risk. Yes.
Yeah. When representing a dual representation, will that not be a conflict of interest in one way?
I'm sorry.
So if one agent is representing for the buyer as well as the seller, will that not be a conflict of interest in?
Well, not necessarily, because we signed another document that says I'm representing both, and that I have to maintain confidentiality between both parties. Okay, I become neutral. Okay, there's nobody has an advantage or the other. Now, as a buyer, you can request that another agent represents the seller, or I can give you another agent that works with me that represents you. That rarely happens. Most of the time, people are comfortable with that agent representing both sides and being impartial and neutral. Okay, so if that's a concern for you, yeah, you can ask your agent that they have somebody represent somebody else to represent the seller, or sometimes, a lot of times, the broker managers will represent the seller, and I negotiate strictly on the buyer's side. Again, different documents to be signed to make sure that those relationships are kept that way. But So, of course, these are my responsibilities to you. I have to give you undivided loyalty. Confidentiality. Anything that you share with me, I can't share with anybody. Now that's under designated agency. Full disclosure. Anything that I find out that is in your best interest, I have to make sure I disclose. If I find out there's something wrong with that house, I have to disclose. Okay? Obedience. I have to obey anything you ask me to do, as long as it doesn't say, as long as it's lawful. I cannot follow an unlawful instruction. Okay, but of course we also have to use reasonable skill and care and full accounting. Now, here are the responsibilities you have to the agent. You have to be open and honest with your agent. You pay the amount of fees if not paid by the seller. And as I mentioned to you before, like I say, in my 41 years, I've never had the buyer ever have to pay my fee. Customers, you talked about that. So as a customer, I can't give you full service because I can only follow your instructions, but I can give you stats and names of other professionals. I can help you filling out the standard form, so I can write the offer, right? But I can't advise you as to what to write and how to write it. But I still have the responsibility to act honestly. Can't do anything illegal. So conflict of interest, if I represent both buyers, sellers, direct or indirect relationships with the client or the other professional. So if you know that I have, for instance, I just listed this property and it's my brother's house. Well, now that there's definitely the potential for a conflict of interest, and that's when you would, insist that somebody else represent you in that case, right? But let's just say you're my brother, and you want to buy my listing. At that point, I would ask my broker manager to represent the seller, and I would represent you. As a customer, I don't represent you, but I still have to be impartial. I become a facilitator, and I provide the documents. So there's the different relationships: customer or client, conflict of interest, potentially. And usually the only time that really arises is if there's a personal relationship with one of the parties involved, either the buyer or the seller. So the next document that you have after the Consumer Relationship Guide is buyer brokerage agreement. That's the document that makes you become a client. Okay? So you have to make sure that the agent is representing you in your best interest, and all their duties and responsibilities are all stated in that document. This is why the government legislated this amendment requirement that all buyers and realtors enter a buyer brokerage agreement or not, at which point you have to sign another document which is called a customer status acknowledgement. Okay. And I've only ever had to do one of those in 40 years. So let's discuss this now. So this became mandatory in 2014. So this has been in effect for 12 years, where we have to do that. Because what it does is it makes sure that it's clear that you understand and I understand what my obligations are to you and your obligations are to me. This is an agreement now that it's got a term. It could be a 30 days, 90 days, 160-day contract. It says that you're making a commitment. You're going to be working with me for that period of time until you find a house. Okay? So again, it outlines everything that was said in the Consumer Relationship Guide, but in more detail. It protects the buyer as well as the agent. It's not a commitment to buy, but a commitment to work together. fees, retainers, early cancellation fees. Some realtors will charge you a fee if you want out of this agreement early. I've never done that, actually. In the space on the document where it says, what the cancellation fee is, I put not applicable. But there's some realtors say, okay, I'm gonna spend 2 months working with you, and if you don't buy, you mean I wasted all my time and didn't get paid? Well, in my case, it would be yeah, right? Because I waived that fee, right? But some do charge. The only time that I actually charge a cancellation fee is when you sell, if you're to sell, and that's basically just because it's not here. The only thing that I've lost is my time, and I'm not saying my time's not valuable. It is, right? But when it's time to work with the seller, in the first 2 weeks, I've probably spent a minimum of $1,500. By the time I paid for a photographer, urban manager, started doing advertising campaigns. In the first 2 weeks, I spent $1,500. So I charge a cancellation fee. Well, you're going to reimburse me for everything I spent, not my time, just what I spent. Okay, so it's an ongoing obligation. Again, early into the agreement, as I said, you can cancel. Usually, it has to be a mutual agreement by both sides. But you know what? If we're not getting along for whatever reason, I'm not going to fight you if you want to know. If we're not getting along, why do I want to butt my head with someone and have all the aggravation for someone who don't want to work together? So I just cancel it. This acknowledgement, this client information, both parties signed the document, and you basically, we do everything now electronically, all those contracts, and it says I'm supposed to give you a copy immediately or as quickly as possible. That kind of goes back to the days when we're still doing the contracts on paper, and we have to go make a copy and give you one back, but now you get it automatically. So now we're getting ready to look for a home. You know what your lender has got you pre-approved for and what your maximum purchase price is. So this is, again, at that point, this is when you want to sit down with your realtor and have a coffee, and let's have a conversation. Let's talk about the areas that you're considering for your new home. Then decide what's important. What are the has, and what are the wants. Okay? I'm going to tell you a little secret about buying a house. Ready? The perfect house doesn't exist. No, Serge, they do. I want to go to a builder. I'm going to build brand new, and I'm going to have everything the way I want it. I said, yes, you will. And I'll take you and help you negotiate with that builder, get you the best deal possible, and make sure you have the right terms as well. Guess what? I'll come back to you 12 months later. Guess what you're going to tell me? I wish I would have done that different. I wish I would have done that different. Perfect house doesn't exist. Did it exist for you, Chai?
No.
No.
It's close.
It's close. And I'll tell you this. Buyers, house buyers, the best comparison I can give you is this. Some people only buy a brand new car, and some people only buy a used car. Okay? Well, what we do know is the people who want to buy a new car are willing to pay a premium to have new. So they just bought this $50,000 car, and they just drive it off the lot, and they drove it home. It's not worth $40,000. Okay?
Yeah.
Because it's now used. Same thing happens with buying brand new home. You typically pay a bit of a premium to have brand new. Okay? And so sometimes it takes a little longer before you start building a lot of equity. Okay. If you're in a flat market, then yeah, it takes a little longer. If it's a down market, it will take you a whole lot longer. But if you're in a rising market like we are right now, I mean, I bought my brand new home. So I'm a brand new car buyer. I'm a brand new home buyer. I bought a brand new home, and I was fortunate that in the 2.5 years, my house has gone up in value about $150,000. So, just lucky that the market is going up. So make sure it's clear as to what are the must-haves and what are the nice-to-haves. Okay. Your realtor will set up a search based on your criteria and your mutual agreed upon parameters, and you'll start receiving notification of new listings that match your criteria. Right. So depending on how many new listings come on the market match your criteria, you might get emails from me every day with a bunch of properties that match your criteria. And when you see something you like, you call Serge and say, Serge, that one you sent me? Yeah, I want to see it. And I'm going, which one? Okay. Because I actually, it's all automated, so I don't see the emails that are sent to you. So I don't know which properties are sent to you. So when you have something that you like, hey, Serge, even if you something I get emails from my clients, that, Serge, the one you sent me last night, I want to go see it. And I'm going, well, I have to track you down and go, which one? Right? And so even if you send it to me by email, or if you're on my website, you can just click and say you want to book a showing on that property. Well, when you do that on my website, it actually tells me which one you want to see, so it makes it easy. Okay. We're actually in a seller's market at the moment. Okay. So in the seller's market, the seller has the advantage, and typically we have upward pressure on valuations. In the buyer's market, you have the leverage, and you can negotiate much harder and try to get more off the asking price. If a property is priced really, really well right now in the entry-level market, it's gone within 48 hours. So you need to be able to act quickly. And again, you need to have your pre-approval in place for that. Okay. In a seller's market, it's also the possibility that you might get into a bidding war, meaning there's more than one buyer wanting to put offers in that. And there are certain strategies that can help you increase your chances of getting your offer accepted. Some people, the realtors will say, oh, don't put any conditions on. Don't do that, especially as a first-time home buyer, because yes, you may be pre-approved. But you submit your offer to the lender. The lender can still turn it down because they don't like the house for whatever reason. Not only do you have to be approved, the lender also approves the home. Like in condominiums, if you're getting into a condominium, townhouse or apartment level condominiums, they're now asking you to provide them all the condo documents, all the financial details, and they review everything. And if they see something that they're not comfortable with, they'll reject the mortgage, even though you've been pre-approved. So, last resort, to not put conditions on an offer. Okay. Now, there's ways of reducing the impact of a condition. For instance, if you put an offer subject to the sale of, subject to an inspection, okay, that you're going to leave alone. But now you can say, subject, instead of having subject to financing, where part of that financing is you, right? Are you pre-approved? They're still going to give you the mortgage? Well, I can rephrase that condition and say, subject to satisfactory appraisal and lender approval. Now I've taken you out of the equation. And so when it sells, well, you got a financing condition, and there's, yeah, we have it subject to satisfactory appraisal and lender approval. Are you telling me that your house won't appraise? I haven't found one seller yet that tells me the house won't appraise. So now I've minimized that condition, possibly making it stronger than someone who's just got subject to financing. Yeah, if you like a home, you make sure you make an offer right away before it's sold. Here's another thing I want to tell you about looking at homes. Before you probably go look at homes with a realtor, hopefully that's me, you probably looked at hundreds of homes online. That's what people do now. Here's what I'm going to tell you. If you go look at a house and the very first house you love it, and then you tell me, well, Serge, we want to look at some more before we make a decision. Okay, so over the next 2 or 3 days, we'll look at a few more. Yeah, Serge, we still like the first one we saw. I call that seller up. I'm sorry, it's sold. I'll tell you that almost all the time when you go and buy a home, as soon as you walk through that home, you'll know if that's the home for you. And if it just happens to be the first one you see, don't let that dissuade you from buying it. Because I've seen it too many times where people tell me, well, I want to see a few more homes, just in case. And then you have to go back on that, it's gone. Especially when you're in the sales market. So when you're writing an offer, there's 3 things to consider: price, terms, and condition, right? So you want to make sure that your realtor gives you a negotiating strategy. Where to start? What strategy? You could be going back and forth between you and the seller several times before you come to an agreement, even if you do come to an agreement, right? So make sure you know what you're willing to pay for that home. And then create a negotiation strategy before going into it. Terms and conditions. Oh, what just happened there? What did I just do? Let's see. No, I don't want to do that. Okay, let's play from current slide. So price. In Edmonton homes right now, this is an older presentation. Right now, on average, single family homes are selling within less than 2%. They're selling at, I think, at 98.1 or 98.3% of the asking price. So there's very little room. Now, that's making the assumption that that particular seller lists the house properly. Obviously, if they overprice the property, that goes out the window. But if it's listed properly at market, then expect that's going to happen. All right. We talked about multiple offers. When you multiple offers, a lot of times you'll end up having to make offers over the asking price. There's people that actually intentionally list the property below market to get people into a bidding war, right? So you need to talk to your realtor and say, okay, what's actual fair market value? That's number one. Number two is, how much we're willing to pay. Terms. These are agreed upon conditions that do not affect whether the deal moves forward or not. So a term could be, for instance, it's agreed upon by the seller that he'll have the house professionally cleaned before you move in, right? These are terms. These are things that we agreed upon, but they don't have to be met prior to that. Conditions. These are conditions that need to be met before the deal moves forward. Now, these would be the ones like we were talking about: financing, house inspection. Typically, the shortest you're going to want to have is 1 week to get those conditions met. But normally, and unless we're in a multiple offer situation, I'll ask for 2. They may push back and say, no, we'll only give you 1 week or 10 days, but we're going to typically ask for 2 weeks. Once financing is approved, and if your inspection is acceptable, then we actually remove those conditions from the contract. We sign a document that removes those conditions from the contract. Now there's another condition what wouldn't apply to you as first-time home buyers is you could put an offer on a property subject to you selling your current home, but in your situation where you're first-time home buyers, that wouldn't be something we really need to be worried about at this point. If you cannot remove or waive the condition, you must sign what's called a non-waiver. And at that point, any deposit you've given with your offer gets returned to you. So we're saying, no, our financing's approved, or no, we found something in the inspection we don't like, we don't want to buy the property, we sign a non-waiver. That kills the deal, and any deposit you've given gets given back to you. Typically, I like to see you get 5% in deposit. Now, you don't have to give that initially when you write the offer. If I'm not in a multiple offer situation, I'll probably ask you to put an initial deposit of $1,000. Okay? But once conditions are met, the balance of that 5%, that's when that will be due. Okay? So the stronger you deposit, the better, because then it helps you in the negotiations. You're negotiating from a position of strength. Deposits. Say typically we're at office 1,000. We don't always make it. It's always made payable usually to the listing firm, with the exception if it's a for sale by owner or what we call them, mere posting companies that don't do it. Again, we try to get 5% of the purchase price, and that's usually within 2 days of us removing our conditions from the contract. Once you make an offer and negotiate, get started, it's not uncommon for offers to go back and forth, like I said, multiple times before you come to an agreement. Your real estate agent can help you recommending strategies to negotiate the best deal. If he's really a good agent, he should be giving you negotiating strategy to get you the best deal possible. Yay, your offer has been accepted. Your real estate agent has been successful in negotiating and agreed between you and the seller. Now, what? Well, first we celebrate. Okay. Now your real estate agent will forward all the documents to your mortgage lender so they can process the application and get that ball rolling again. Also, your real estate agent will coordinate with the seller, the house inspector, and your schedule to schedule time to do the inspection. So when it comes to inspection, they take anywhere from 2 to 4 hours, depending on the type of home and how big it is and what's all involved. And you don't have to be there for the whole 2 to 4 hours if you don't want to. But I do recommend that you're there at the end, that he can go over the findings that he found it with, and actually can go show you what he found. Okay? Now, if you can't be there, it's not a big deal, because he's still going to send a full report, and with pictures and shows what's going on, right? But it's always good to be at first hand. I actually want to see where the problem is. So typically, a lot of my clients just show up for the last half hour. So that brings us over to Rami here. He's going to talk about inspections.
Thank you for coming today. My name is Rami, and I'm with Magnify Inspections.
Just click the mouse and go through it. Yeah, someone should be.
So I'm sure Serge had kind of got you all the way here now, that you deal with your mortgage, you deal with your, find a home that you like, put an offer, have the offer accepted, and time comes for the inspection. So home inspections are regulated in Alberta. So we are licensed, we have to be licensed, not anybody can call themselves an inspector, even though they might really know a lot of stuff about homes. So you have to be licensed, and in my case, I'm licensed member of the Alberta Home Inspectors Association. And my background started in insurance, moved into maintenance and property management, and I felt at one point that it's only natural for me to start inspecting homes. If you go on our website, which I invite you to do after this, you will see that we have 5-star reviews, and you'll see a lot of comments about my dealings with my clients, how I inspect, and how everybody is perceiving my service. So my goal today is to kind of take you through the process of inspections from, like I said, when your realtor hands you or tells you to go over and get an inspector, okay, all the way to the inspection complete. So when you have an offer accepted, that's the time to actually start looking to book your inspection, okay? Usually it's best to talk to your realtor and ask him when is the best time and date for the inspection. Realtors will talk to other realtors who talk to their sellers and determine, okay, when can the seller be outside of the home so we can go in and do the inspection. When you agree on a date, you call us or you go on the website and you can book yourself in. We have a very simple process. Few questions and you're booked. Pricing is standard with a couple questions. There's no variations, not a lot of variations. I like it to stay simple and fair to everybody. So you're booked. Now you wonder, okay, why should we inspect the house? Okay, that's a very important question. So for buyers like yourself, most likely, is you want to have the financial well-being after you buy the house. So Serge is a very good realtor. Other realtors are maybe new realtors. They still don't know what to look around for when you guys see the house. Some people actually come to us without a realtor, so nobody advised them on anything. Okay, so a lot of times you walk in a house, you walk in a room, you look, hey, looks good. You don't know what could be behind the walls, in the ceiling, in your foundation, etc. So what I don't like to see is, people buying the home and then being surprised later, having to fix things that would cost $10,000, $15,000, $20,000 in some cases. Okay, that could really affect somebody. Okay, so your financial well-being, your safety. Some things that are wrong with the house could actually be unsafe for you to live in, right? So we want your safety, as well as for those people who don't have a realtor, okay, nobody advised them. Sometimes, when they call us for the inspection, I go there and I chat with my clients, right? I've had clients, for example, who were renting the home, spoke with the owner of the home, said, I like to stay here, would you sell me the house? The guy said, yeah, I'll sell you the house, no problem. So they called for an inspection, luckily. I go there and we find one thing, two things, three things. I never tell my clients not to buy a house. My job is to show you all the things. By the end of the inspection, they said, you know what, that's too much for us to handle. So we're not going to buy the house anymore. Now, I feel bad for the seller, but at the same time, nobody advised these clients. And now that they kind of see, okay, you know what, there's a few things to be done here, they didn't think about it. So I feel like I'm a valuable second opinion to people, okay? Now, for sellers, we also advise people who are selling their home to actually get the home inspected. Why? Because when you inspect the home before selling, okay, number one is you get to fix the things that I tell you need to be fixed at your own pace, right? You're not forced to go use the most expensive guy because it's just available tomorrow and that's all the time you have, right? Remember when, Serge probably explained, the buying process is very short, right? So you put an offer, you say, give us 10 or 15 days to do financing and inspections, right? After the inspection, there's only 15 days left that the seller has to fix anything, okay? So not always you can find a roofer in 15 days or change windows in 15 days or whatever. But if you actually get the house inspected before listing it, then you get to know everything that's wrong, decide, okay, you know what? I am gonna fix the windows, or I'm not gonna fix the roof. I'm gonna just drop the price from now so that my house sells with the roof needing fixing and so on. Okay? So for sellers, when you do that and you fix things, it will sell faster, and in my experience, it will sell for a better price, because the shorter the list of the inspector, the more money they'll get usually for the house as well. Okay? So that's why we should get inspections. Okay? And we spoke about the best time to book, right when Serge tells you to book, and the day and the time. Okay? Now we get into the, like I mentioned before, the inspections industry is a regulated industry in Alberta and in most of Canada. So when you book your inspection with us, you're gonna get an agreement that you have to sign. And Serge had to kind of help me out a few times where I text him saying, the client hasn't signed yet, it's 2 hours before the inspection, we are gonna get it signed. And he scrambles and I scramble to get it signed, because we cannot do the inspection without the signed agreement. Now, what is the agreement? The agreement, my agreement that you sign, has been reviewed by the government. Because the government does not want my agreement or anybody's agreement to be too harsh to the client or too unfair to the inspector. So it has to be kind of, equal for you and me and within the law. So they review it and they tell me, okay, you're okay to use this agreement with your clients, and that's what I use. I can't add, I can't take out. Okay? So that's to tell you that feel comfortable when you're signing these contracts that the government, in most cases, have reviewed them already. Okay? And like I said here, the government wants you to have clear expectations of what you're getting and what you're not getting. Now, what are you gonna get inspected when you sign up for the inspection and you pay for the inspection and so on? People ask me that all the time. So let's start with the roof. Okay, so we inspect your roof. On the roof you have vents, we have plumbing vents, we have attic vents. Okay, we have your shingles, we have your gutters, we have your downspouts. Okay, we have your soffits. All that gets inspected. Okay, we use drones to go up when the house is high. When the house is not high, sometimes we go up, but if there's snow and so on, we still use drones. Drones are great. Okay, we go through the exterior. Okay, your siding, your windows, your faucets, your vents on the outside, your grading. Everybody understands the ground around your house, right? We make sure that it is actually making all the water go away from your house, not towards your house. Okay, we inspect any decks you have. Okay, we inspect garages, attached or detached. We don't inspect your shed. We don't inspect your fences. Okay. On the inside, when we go inside, when your realtor arrives and you arrive, we go inside together. So we inspect every room in the house, and your report, my report, will say room number 1, number 2, number 3, 4 bedrooms, bathroom 1, bathroom 2, bathroom 3, 4 bathrooms, kitchen, entrance, hallways, etc. Okay, new homes have a lot of bonus rooms upstairs, so you'll see a bonus room also as well. Okay, then we go in the basement. In the basement, we check the basement, if it is finished, or if it's not finished, we check it as a foundation. We check your furnace, your hot water tank, your electrical system, the plumbing drains, and then we go up to the attic. Okay, we check your attic for good insulation, for any signs of mold, any issues with the structure of the attic. Okay, and then we finish off with thermal imaging. Okay, so thermal imaging shows us within the walls, okay, behind the drywall a little bit. It's not like there is no drywall, but it does show us behind the drywall. I have some pictures here later to show you. Okay, and so what to expect, what should you expect during the inspection? So it really depends on the inspector that you're actually going to hire. Okay, but if you do hire me, which I hope so, you do. I arrive an hour early before you do, and I do the exterior so that we're not there together 3 hours. It takes me an hour to do the exterior. I arrive an hour early, I do the exterior for you, and when you get there, we go inside together, and it's usually about 2 hours inside. So, like I mentioned before, we go room by room, and I start on the main floor, I go to the second floor, and then I go to the basement, and then attic and thermal imaging. This way, any water I ran on the second floor, on the main floor, would have made it to the basement by the time I'm in the basement, and I can see, oh, there's a leak here, or there's no leaks, okay? So, that's what you expect on the day off. Now, when we're done the inspection, okay, I always like to give my clients a verbal summary in the end, okay? So, you at least know what you're expecting from the report. So, we take a few minutes, I explain what I found. We call them deficiencies with the house. You can ask me any questions there. I will answer those questions for you, and if everything is okay, I'll send you the report after. And in the report, again, you'll see my work documented with pictures, with notes, etc., room by room, on everything in your house, okay? And you can ask me questions after you get the report, a day after, 2 days after, a month after, okay? I always like to hear from my clients, and you got no problems getting a hold of me. This is an important part. This is not to try and sell you more services. This is to honestly educate you and kind of help you with being protected, when you're buying a home. So Serge and I deal, a lot together, and I help a lot of his clients, and he knows the most important service is the sewer scope. So everybody wants to inspect the house, which is great. But in most cases, we're not inspecting the most important thing, which is taking all that sewer away, okay? Now, I am reasonable too, okay? I don't want to take your money unfairly, okay? So, on a brand new house, if after all my tests, the water passed through, it means it's fine, right? But when we're looking at homes, if you're looking at homes, and I'm not telling you not to look at homes, but if you're looking at homes that are like 1970s, 60s, even 80s, okay, and early 90s, a 35-year-old home, definitely get your sewer scope done. That line has been in the ground for so long, okay? I've seen trees and roots go through them. I've seen them settle and sag. I've seen them break, the connections breaking. So I have some photos to show you about that too. Every year, after the year ends, I look back, and if I was to say, because, remember, I mentioned, get that sewer scope done for sure for 25, 30, 35-year-old homes, okay? And honestly, it's about 7 out of 10 homes that you will see problems in.
Yeah.
Within that time frame, okay? Not on a brand new house, but a 25, 30, 35, 40-year-old home, when we go into the scope, there's 7 out of 10 times there's always an issue, okay? So, you'll get your money's worth there for sure. Wet inspections. If you are buying a home that has a fireplace, a wood fireplace, the wet inspection, the wet stands for wood energy transfer technology. Can you believe that? It was from the Bronze Ages, but it is a technology. So the wet inspections are required by your insurance company if you have a wood burning fireplace in the house, okay? So there is special inspections with special forms, and that's an extra inspection. It's not included in the basic inspection that you would sign up for usually, okay? I'm gonna help you out and educate you on these couple things here. The asbestos and mold. Everybody's afraid of mold, and everybody, if you've heard about asbestos, you're afraid about asbestos as well. Well, since you attended today, I'll kind of set your mind at ease. Asbestos was stopped in the 80s, okay? So any home, 90s and after, you don't have to worry about it, okay? A home that was before it, okay, you can get it tested, okay? Usually, I like to tell my clients, let me go do the inspection first. Let me look for signs, okay? If I see a strong reason for you to do that, we can. The problem with asbestos testing is we cannot do it when you're still negotiating about the house. Why? Because I gotta cut the wall and take samples. And nobody's going to allow you to cut their walls and ruin their walls while you still haven't bought the house. So what I usually do is I would tell you in the report, there is a probability your ceiling tiles might have it, or your drywall might have it, or etc. Okay? And then you kind of take that into consideration based on the age. It doesn't mean you 100% have it, but we cannot really test for it right when you still haven't owned the house. Okay? Mold. When I'm inspecting the house, your bathrooms, your attic, your ceilings, etc., if I see signs of mold, I will tell you. You don't need to pay me extra for that. Now people say, but would you test the mold for us? My sarcastic answer is, do you care what kind of bacteria it is? I don't care, right? It doesn't make a difference. You don't want to, if it is actual mold, which we can tell by looking at it, you don't want to come close to it, you don't want to disturb it, you don't want to smell it. It doesn't matter what kind of bacteria it is. So don't waste your money testing it. Just know you have to fix this issue in the house. Okay? So, in other words, I'm saying, wait for the inspection. Let's see what we find. Don't go wasting your money on these two right away, the asbestos and the mold. Let's wait for the inspection. And then if you're buying an acreage, in Edmonton, there's only a few properties left with no city water that I know of. So well testing is really only for acreages that are outside of the Edmonton territory, really. So if you're buying a home in Edmonton, you have city water, you don't need the well testing. And septic systems, which is basically, again, on acreages, like a septic tank and a cistern. So those two, you only have to worry about them if you are buying an acreage. I hope you all are buying acreages, because that means you all got lots of money. But, in general, you don't have to worry about those two, okay? Now, things that we find usually kind of on our inspections. So this home here is from last summer, close to White Ave, and not White Ave, sorry, 118 Avenue there in the east side of Edmonton. Okay, that's how shingles look like when they really, really, really need to be changed. Okay, so most often when we're inspecting, if you can see, we see this a lot, and I flag it for my clients because every nail that's not caulked is gonna lead to a leak one day. Okay, maybe not the first year or second year, but it will. So I bring it to your attention to have someone go up and put special roofing caulking on those. Okay, this basement here was a wood basement. So there are homes that are built with actual wood, not concrete, and this was a wood basement that had moved. And you can see here the difference between this wall and that wall. So I went to that inspection prepared because I heard from the client and the realtor that it is a wood foundation. So I went there knowing what to look for, okay, and making sure that we're looking for the right things. So we found that the wall is kind of pushing inwards, and the client, I think, decided to move on from there. But that was a good find. Here, see, people underestimate the grading and the ground around your house. So this house here, and this is why you really need inspectors, okay? So for most people, and don't get me wrong with this, but for most people, they'd love to have this long driveway that they can come behind, park so many cars, all the kids, great, yes it is. But the problem with this whole driveway is it was all sloping towards the house. So because it is concrete, okay, and it's already broken, so you cannot mud jack piece by piece by piece by piece, and it had sagged quite a bit. Okay, you can see almost here the difference. Okay, and this is from far, so there was a 6-7 inch drop. So this would have turned out to be a $10,000-$15,000 job to break that concrete. Okay, and not only you cannot replace it for that much, I don't think, but you gotta break it, haul it away, and maybe put dirt or something. Okay, so things like that only inspectors kind of pick on. Okay, you think it's a perfect house, I can park my car, but then it's a $15,000 job. Okay, so definitely get your inspection done. This is the infrared, which sees through the walls, okay, the thermal imaging. So this is an example of water seeping from the window. Okay, that's how it looks like. This here is an example of insulation missing in the attic. Okay, so you can see all the consistency is great here, except here there is no insulation. Okay, so this one here is a brand new house that I went and I inspected, and I got into the basement, into the attic, and there is no insulation. Okay, so what would have happened in this case is the clients would have definitely had rainy ceilings come winter time. Okay, so we caught it early, saved them the hassle, and the builder did come and fill it up with insulation afterwards. Okay, here we have some greenery growing under the bathroom drain. Okay, this is a sump pump that had failed. Okay, this is somebody doing their own work on their own house, plumbing, cutting the joist, the floor joist. Okay, again, not many people would pick on that, right? But this guy here, this is where you stand in the kitchen. So what's going to happen more and more is that floor is going to sag under you, okay? Because there is no support anymore. Okay, so we caught that, they fixed it. Okay, this here, only an inspector or an electrician is going to be able to tell what's wrong with this. Okay, so you see breakers, everybody sees breakers, right? Okay, well, what they did here is they took 100 amps to the garage from the 100 amp panel. So 100 amps come into the panel. These guys took 100 amps to the garage to charge their electrical car. Okay, so I caught it for them, and this was done with no permits. It's not proper, not adhering to code. Okay, so we caught that for them. We somebody here played with their electric meter. How do I know? Because it doesn't have the safety lock that it should have here. Okay, we see water in a furnace here. We always flag these, because water in a furnace means it's only time before it's gonna ruin your motherboard in the furnace, and the motherboard in the furnace could be, $500, $600, $700. Okay, so fix the water issue, save yourself $700, $800. This is a sewer line. That's what I'm saying. You see, this is roots and calcium buildup in this sewer line. Anything wrong with this here? This is a nice photo of it, a clear photo. Let's see who can pick up on it. Oh, minor calcium, yes. But what else? Did you see anything wrong with it?
Sagging,
Sorry?
It's flattened.
sagging or bent.
It's flattened.
Right. It's not a perfect circle anymore. So it is getting exactly okay. So basically, it's only a matter of time before that whole line will collapse. Okay, so that's why, honestly, I never think it's a waste of money to get your sewer scope inspected. Okay, and like I said, not on a brand new house, unless I tell you to, because I found issues. But older homes, 20 years, 25 years, it's money well spent. Okay, and if you are wondering how much it costs, $175 to save yourself all that headache. Okay, so, and it's not my favorite job to do, but I like to do it for my clients because it saves you a lot of headache and money. Okay, so $175 on top of your inspection cost is not a bad deal. Okay, next is after your inspection, stay friends with your inspector. Inspectors are nice guys to have on your side, okay? I have my clients calling me saying, this happened like 5-6 months later. They're not blaming me for it. They're just, they trust me now, and they like what, they know that I know some things. What should I do? Say, let's get you a furnace guy. I know furnace people because I'm inspecting every day, and people ask me, right? If they need to fix a deck or if they need to fix a roof. So stay friends with your inspector. If you like his work, all inspectors depend on Google reviews. Okay, that's how everybody knows. So leave your inspector a good review if you like them. Okay, it helps them a lot. And never feel like, oh, the first week is over, we can't call him anymore. No, feel free to call me. Okay. So that's it. If you have any questions, I will happily answer them for you.
So how much is like the inspection charge is based on the square foot or?
Yes. Yes, our inspections are based on square footage. So this pricing is a little older now. Now, would you like brochures? Yes. So the pricing currently is $399 for any home under 2,250 square feet. Okay, so $399 plus tax under 2,250 square feet, $175 for the sewer scope. Now, if you are buying a home over 2,250 square feet, you're looking at, I think about $475 after our $50 discount. So it's still a reasonable price, and you're gonna get a great service and a great report after, and yeah, it's a very competitive price.
Thank you, Rand.
Thank you.
You're welcome.
Sorry, just one last question.
Go ahead.
Yes.
The buyer is the one who pays for the service.
Right.
Okay.
Yes.
At what stage do you, like, when you're still negotiating?
No, after you negotiate, remember we talked about 1 to 2 week time where we have to meet our conditions, financing and inspection. Yeah,
Oh, okay.
yeah. So I help you coordinate.
Like I mentioned in the beginning, when you have a finalized agreement,
Yeah.
and now you have to make sure your financing is finalized and your inspection. Your realtor will tell you, okay, book this day and this time. You call me and you say, I want to do it on this day, this time. And that's why I say book early so that you get the times. The worst is in the middle of the summer when everybody's busy and you want to get it the next morning. It's not going to happen. Okay?
So just for you guys to know that your typical inspector will normally charge between $500 and $650. He's giving, that price he's giving you, that's for my clients.
Yes.
Oh, nice.
Yeah, he gives my clients a discount, so.
And compare. I always encourage people to compare. So compare pricing, talk to a few people. You'll still find me the best. Okay? I'm pretty confident. Okay? Thank you very much. Thank you. Thank you. Thanks.
Okay.
Yeah.
So now we're kind of got to steps where we met our conditions, financing and inspection, right? We remove them. We now basically buy the home. We now turn everything over to the lawyers who will then start preparing all the documents that are required for your close. So for that, we got Brandon here. He's one of the partners here at Basic LLP. And I'll let him come on in and start.
Alright, hello everyone, thanks for coming. My name is Brandon Messier. I am one of the partners here at Basic LLP. There is 2 other partners here, Maggie, he's over there with the lobby, and we also have Carl. For this presentation, I wanted to kind of give you like a breakdown of like the role of the lawyer, the real estate transactions, and some things that you should know about the transactions. And some of the stuff is going to be repetitive from the previous presentations. But yeah, let's go into it here. So a bit of an agenda. So we'll go over the role of the lawyer, when you should contact a lawyer, reviewing the offer, real property reports versus title insurance, due diligence, working with your lender, the signing appointments, calculating closing costs, and then what happens on possession day, and then we'll end with some questions. So the role of the lawyer. So this is kind of a breakdown from beginning to end what the lawyer does. So they review the transaction documents and make sure the purchaser is complying with the terms and conditions of the contract. We'll conduct title searches and property tax searches for the property. Then we'll coordinate with your lender, receive the mortgage instructions, satisfy any lender conditions, and then register the mortgage. We'll also obtain a real property report in compliance or title insurance. I guess I'll get into that a bit later. We'll prepare the actual transfer documents that get registered on land titles, and then we'll obtain the mortgage proceeds from your lender. Then we'll pay out the balance that's owing on the transaction. Then we'll register the documents at land titles, and then we'll follow that up with a final report once the documents have been registered at land titles. So I kind of broke this down into 6 phases here. So step 1 is when the offer is accepted. Step 2, the conditional period. So this is once the conditions have been removed. And in between step 2 and 3 is normally when you should be contacting your lawyer. So at least 3 to 4 weeks before closing. Step 3 in the mortgage instructions are sent to the lawyer. Step 4, you have the actual signing appointments. And then step 5 is the closing date. And then step 6 is post-close.
Yeah.
We're reviewing the offer. So a lot of this had already been covered with Serge. So the only thing I really wanted to focus on this part is one of the conditions you can put into your contract is that subject to lawyer's approval. So we can review the contract for you and the offer before you finalize that. So a lot of people don't know you can do that. So that's one of the things that we just want to point out there. The rest of them, Serge already mentioned, like the financing commitment, review of condo docs if you are purchasing a condominium, including permits, repair, to complete all the sellers and all the searches for legality of suites. If the place you're buying also is like a rental unit, we want to review that too. So real property reports versus title insurance. So unless you're buying a condo, the offer to purchase requires the seller to provide either a current real property report with compliance or title insurance. So a real property report is a survey that's prepared by Alberta Land Surveyor. It's going to be showing that the property boundaries, location of the house and structures like garage, decks, fences, and sheds, any setbacks and distances from the property lines, and if there's any encroachments. Normally, they will have, like some of them will have municipal compliance. That just means the city has basically reviewed the real property report and made sure everything's in compliance in terms of the rules and regulations. This is best for buyers who want certainty about their physical boundaries and compliance before closing. If the seller does not have an RPR or it's not current, they will often adjust the contract and substitute title insurance for real property report. So that's going to actually be in the actual purchase contract. Title insurance, on the other hand, so title insurance is it's an insurance policy that protects the owner and the lender against certain title related risks. So it's going to covers the required changes to the structures because of any permits or setbacks problems that weren't addressed in the property report. So what it covers is going to be the known title defects, fraud, forgery on title, some encroachments, errors in surveys, work done without permits. And it is best for like fast closing, or if you don't have a real property report, or when the survey compliance cannot be confirmed in time. We can, if you have real property report, we can get compliance. It takes a little longer before closing, and it's more costly. So a lot of the time, we just close with title insurance. So due diligence. Again, this is kind of a repeat of some of the presentations already, but before your purchase becomes final, you should carefully investigate some of these things here. So financing approval, you want to make sure you do have approval before you sign that purchase contract. Do the home inspections. You want to review title and the property taxes. Like I said, we do review these for you, and we'll review them during the meetings, the signing appointments. If you are purchasing a condo, you do want to review the bylaws, financial statements, there's reserve fund studies, special assessments, and also meeting minutes. You want to make sure you're counting home insurance before closing. This is going to be required, especially if you are getting mortgage proceeds from a lender. You want to review utility costs and service providers, and also if you're again purchasing a unit that is being rented out, you want to make sure you've had a chance to review any leases, lease agreements before you assume that agreement there. So working with your lender. So once you have been approved, the deal isn't signed, we'll receive the mortgage instructions from your lender. So we'll review, normally they're like it's a package of instructions, and we prepare the documents on behalf of them. So we'll review the lender's conditions to make sure all the requirements have been met prior to funding. We will review title and do all the due diligence for you in terms of making sure you clear title. We'll register the mortgage over brand titles and ensure the lender is secured and protected. Like I said, we prepare the mortgage documents. We'll review all that stuff with you during the second appointment. We'll coordinate funding. So we have to request funds. Once you sign the documents, we got to send them in and request funds. Normally this takes 3 to 4 days. So it's very important that you reach out to us and make sure all the funding is done in advance so that we can make sure we meet all the deadlines before closing. Some banks are different, but most of them are between that 3 to 4 range. Once the deal closes, we do have to report to the lender once we get registration. And then we will use the mortgage funds along with down payment to pay the seller for the cash purchase. So signing appointments, we normally like to have these 1 to 2 weeks prior to closing. The way we do it here at this firm is half of it's going to be in digital and half it's going to be in person. So when the digital documents are mostly going to be like your retainer letters, your basically acknowledgement, directions on how we're going to use the funds that we receive. Again, the high ratio mortgage acknowledgement that was brought up earlier, and then also the consent to act for the lender. In-person documents are going to be primarily the actual lender documents, your mortgage documents, and any transfer documents. So those have to be witnessed in person. We do offer virtual signing appointments. They are permitted in Alberta, so if you weren't able to come in person, we can do those digitally. But again, we need to make sure we make the proper appropriate arrangements prior to advance, because we have to send the documents to you, and then once you sign them and met online, you have to send them back to us. So we can't just do like a digital DocuSign for those documents. So if you're going to be doing that, make sure you're giving your lawyer enough time to make those arrangements. So the closing costs. So this is kind of the statement, so the estimated shortfall calculation that we do provide our clients. So you'll see on the top here, it's going to start with the purchase price. So that's going to be what you would read for purchase price to be for the property. We're going to make adjustments. So you're going to have like property tax adjustments. You're buying a condo, so the condo fee adjustments, homeowners association fee, and rent. And it's going to depend on what you're closing throughout the year. So typically, when you're purchasing a property, you're going to be the seller's going to be responsible from, it's based from January to December. The seller's going to be responsible from the beginning of January to the closing date. Purchaser is responsible for the closing date. So that's how we do the adjustments. Once we do those adjustments, then we calculate what your mortgage advance is going to be. So what the amount that we're actually getting at the firm. So that's going to be minus all your mortgage costs and fees. That's going to be discussed with your broker. Once we have that amount, we'll do a calculation, and then we'll also add our legal fees. So our legal fees, which I'll get to in a second, they are flat rate, so they're not hourly. So they're based on if you're going to have a mortgage. So if they're a purchase without a mortgage, it's going to be $95 flat rate, and then for a purchase with a mortgage, it's going to be $995. So once we make those calculations, then we're going to come up with what's called the cash to close. That's going to be the amount that we require to basically close the transaction and send it over to the seller's lawyer. So on our website, actually, we do have a mortgage calculator. So I'll go to it here. For some reason, I can't get into it, but when you go to the website, we're going to have a mortgage calculator. What you can do is you can put in what the purchase price is going to be for your transaction and what the amount of mortgage your mortgage is going to be. And it's going to break down basically our fees, the estimated disbursements, and then also the land titles registration costs. And it's going to give you an estimate of what the total legal fees are going to be for that transaction. So you kind of have a heads up before you meet with us. These are going to be estimates. So like the disbursement costs, that's going to be like your couriers that we have to send documents back and forth between the seller's lawyer. If we're doing any kind of deposits, we have to get couriers for that too. The searches that we do of land titles, the property tax, all that, those all fall under the disbursements. So that's going to change, but the legal fee itself will be the same. So what happens on possession day? So the big thing here is just make sure you keep an eye on your deadlines. So the realtor, broker, lawyer, we're all going to keep you on track in terms of the deadlines there. But you want to be mindful of your financing condition dates, property inspection condition dates, and the meeting you have with the lawyer and your closing date. Don't forget about your insurance. So if you will need to obtain property insurance prior to the closing date. So shop around for the best date or best rate. You want to make proper arrangements for possession. So you want to make sure you contact your utility companies to move accounts. You want to make sure you arrange movers. And consider if you need like a transition period between moving out of your rental, moving into your new home, advice county post, banks, all that stuff. On the actual closing day, so what happens is once we get the funds, they normally come into our office around 9 to 11 a.m. between there. We will prepare all the documents to send over to the seller's lawyer. That typically is around noon. And then we will, once the sellers receive the sale proceeds, they'll reach out to the realtor and they'll tell them they can release keys. That's when you get keys.
Well, we're assuming that, right, the estimation. Good, if you don't have
So that's basically what we do here as lawyers. Do you guys have any questions
Yeah,
about any of this?
but like, why is this?
We're just thinking, when you're buying a house, suppose they are like outstanding utility bills, who does the checking? Is it me the buyer or?
No, so we'll do that search for you. So normally it depends on what piece of house we're buying in, but we'll do the search. It'll actually say like if some of them will have the utility outstanding, depending on arrears in there.
Yeah.
And so we'll know that. So that's going to be on the sellers to make sure that's taken care of. And we'll make sure that's taken care of prior to. So that's going to be addressed before. Yeah. Any other questions? We're good?
All good?
Yeah.
So, one thing that Brandon, I don't think mentioned, if you remember when he was at this page, you were saying, oh, here there are the legal fees. Here at Basic LLP, all my clients get a 10% discount on the legal fee portion of these costs.
Oh, okay.
Okay,
That's nice.
perfect. So everybody's good with Brandon so far? We're good to go?
Yeah.
Move on. All right, we're almost done, guys. Session is supposed to happen at 12 o'clock noon. Okay, of that day. It depending on how things work out, sometimes the lender might be slow to getting the money to the lawyer that morning. But usually it happens sometime between 11 and 1 o'clock. Okay. I find a lot of times with clients that use basically, I get it before noon. Basically, LLP is actually one of the top real estate firms in the whole city. As far as there's probably half a dozen that are, do a large portion of all real estate transactions, and they're one of them. I've been working with Carl for almost the senior partner here for almost 30 years, 35 years maybe. So for opposition date, the lawyer transfer all the monies to the seller's lawyer. Once the seller's lawyer has received the funds, he'll give instruction to the listing realtor to release the keys, at which point then I get the authority to go pick up the keys on your behalf, and I may have to drive to different parts of the city to go to that listing agent's office to get the keys. sometimes they're nice and they leave that blue box that you see sometimes on properties, on the property, so I don't have to go anywhere but to the house, and then I typically meet you there. You want to be sure that you're able to come and meet me as soon as we have key release, okay? Because what we want to do is we want to go there right away, have a look, and make sure that everything that's supposed to be there is there. There's no damage that's been happened. You know, I've seen where people made holes in walls when you were moving furniture out. Well, hey, no, they're supposed to fix that. Only reasonable wear and tear is deemed to be acceptable, right? A lot of times, I also will advise my clients to put an additional term condition on. So it's not a subject to condition, it's an agreed to condition. And that's that they allow us a walkthrough within 24 hours of possession. That way, we either go the night before or that morning and inspect it. And if there's a problem, we call the lawyer up before he sends the money to the seller's lawyer. Say, well, we have a problem, and now it becomes a legal issue. But then the lawyers can then solve the problem so that we're not stuck with a problem. It's not potentially a bill that we have to foot, or either we foot the bill, or you may end up having to try to sue the previous owner for whatever. You know, I've seen holes in walls. I've seen where they've taken appliances they weren't supposed to take, or they took blinds that they weren't supposed to take, right? So we want to make sure of that. Again, I'll pick up the keys, meet you at the home. This is finally officially yours. Enjoy. So before I get to that, well, I do want to thank you for your time, but there's a couple things, a little housekeeping I want to do. Everybody in the back of your packages were a survey. I'm going to ask you guys to all fill out that survey, because what we're going to be doing is we're going to be drawing for one or two gift cards, at least one for sure. So it's a Walmart gift card, good for almost anything. We're just going to use a random number generator to determine who the winner is. The other thing I want to talk to you about is this here. This is my VIP rewards card. If you're fortunate enough to get one of these, you can register and become a member of the VIP rewards program. And it allows you to have all kinds of promotional pricing and discounts for all kinds of different businesses, like Specsavers in Millwood, 50% off. The brick, like appliances, is almost builder wholesale. Furniture is still a good discount. TV is hardly any discount, but 20% off Papa John's delivery pizzas, and moving companies like One Stop. They're going to come and talk to you here in a minute, and they give you promotional pricing and discount for using them for your moving. So there's probably about right now somewhere around 80 different businesses that you can get discount on, including slight discount on Oilers tickets if you're a hockey fan. Okay, so while you're doing your survey, I'm going to ask One Stop or Last Stop Moving to come in and give you a quick presentation, a little bit about their services, and we can go there.
Awesome. Yeah. Awesome. Hello, guys. My name is Wyatt Matson. I'm the VP here with Last Stop Moving, and we're a local moving and storage company operated on the south side of Edmonton. So today, Serge brought me in, and I was like, what could you guys really use? Like first-time home buyers. I was like, I don't think I need a lengthy presentation or anything like that. I just thought, hey, what are the most common questions that I get from new home buyers or from people that have never really moved before? So I'm just going to kind of go over those with you guys. So that's all right. So the first one and the main one that I get probably from almost every client is, hey, how much is this going to cost? Or like, hey, what's the price? And before I kind of get into that, because I'll give you guys an answer 100%, I first want to walk you through what it's like if you're actually calling movers and you're asking that question. So let's say you called in and you're like, hey, I'm looking to move, and hey, how much is this going to cost? if the moving consultant tells you immediately, hey, this is going to be $1,000 or $2,000, something like that, it might want to raise a little bit of a red flag because we want to actually get an idea of what you guys need to move. Because moving's not like an apples to apples situation.
Yeah.
It's service. So it comes down to like everything's a little bit different. You guys have a unique situation and we want to tailor it to you guys. So it's like the mechanic that if you brought your car there and he tells you you need to change your oil and this and that, but he's never looked under the hood, it's kind of a problem. We want to make sure that we look under the hood and get all the details first. So what that looks like is the moving consultant should always ask you, hey, like what size of home are you moving from? Get the addresses, because there's also going to take into consideration like where are you guys moving from and moving to, and then put that all into a proposal so that you guys have a true cost on like what the move's going to be about. And for anyone that doesn't really care about that side of things, a general idea for like a 1-bedroom house to 2 bedrooms or even a studio apartment, that range can be about $500 to kind of $1,000, upwards like $1,500. If we're looking at a 3-bedroom, that's a little bit more complicated because I'm sure you guys know some people have 3 bedrooms that don't have anything. Others have 3 bedrooms with 5 beds and 6 couches and 2 refrigerators, things like that. So in general, like it could be $1,000 I've seen for 3 bedrooms, up to $2,000 and plus. But the average is about $1,500 for a 3-bedroom. And then for 4 bedrooms is kind of where we get in the range of about $2,000 and kind of up. And I'm talking this is locally for moves. If you're moving like out of province or let's say Calgary, you guys might want to expect like an extra like 50% to the actual cost of the move because there's going to be 3 hours there and then 3 hours back. Does that make sense? Any questions on that side of things? Okay. The second most common question that I get is actually about coverage or belongings. Because that's one thing, I'm sure you guys have things in your home that is really valuable. You want to make sure it's protected. So I'll split this into 2 parts. You always ask the mover, hey, like, what are you guys going to do to protect my home? What we do is anytime we come into your house, we put door jam protection on the doors, and then we'll lay out floor runners throughout the home. That way the doors aren't being dinged and the floors aren't being like scratched up. And then thirdly, for your items, and probably most importantly, is we'll quilt pad and wrap all of the furniture inside the home. And then that way, everything stays wrapped, protected, till it gets to your new house. No walls are getting dinged and your like valuables are actually protected. Second part of that is actually the coverage itself. So for insurance, one of the big things you guys want to ask about movers or to either us or any company that you guys are looking for. One is WCB, because if there is an accident where somebody in your home gets injured, one of the movers, we want to make sure that you guys aren't liable for that. So always make sure they have WCB coverage. And then the second is standard liability insurance. So it's for carriers. And what that means is for your belongings, if there's a truck, all of your possessions are on this truck, and for some reason, the wind blew it over or it lit on fire and everything was gone, that you guys are going to get compensated for that. So there's we personally have 3 different coverages in that terms of things. One is 60 cents per pound per article for your belongings. The second is $5 per pound per article. And the third is $10 per pound. So if you guys have really, really expensive furniture, you guys might want to look at getting something that's a little bit more coverage. If you're somewhere in the middle, then that $5 per pound is also a good option. And then basic, if you don't want to spend anything extra for that coverage, we always include, it's no cost to you guys, 60 cents per pound per article. For cost-wise on that, just for a general idea, it is based on the weight, like the weight is an estimate that we give. So it can fluctuate a little bit, but in general, for that kind of $5 per pound, it can be like 50 to kind of 250 extra for that additional coverage. And then for like $10 per pound, it's usually 250 to kind of $500 extra for that additional peace of mind, if that makes sense. But those are the 2 coverages that you want to make sure or ask about. And if you're reading a contract, that you kind of see those fine print details, We personally always explain it to you guys so that you know exactly which coverage that you'd be getting and what that actually entails. But not everybody might do that. So it's a good thing to look into if you guys are ever looking through a moving contract. Okay. Do you have a question on that or? Yeah, so good?
It's good, yeah.
Okay, perfect.
I have a question.
Yeah, for sure.
Now he's talking about, unless I missed part of it, about moving, but sometimes your move may not be on the same day, and they provide, if you want, to have access to temporary storage.
Yes, that's correct. So if you guys have possession dates that aren't lining up, there's two options for it. One is that we can keep your belongings on the truck if it's only going to be a day or two. That's usually the best option, and your items will stay wrapped and protected on the truck the whole time, so it's not getting unloaded and reloaded. The second one is that we can actually bring it into a storage container, and that would be, hey, we would unload it into the container. Everything still stays wrapped and protected, but then we'd have to reload it onto the truck and bring it to your guys' new home. Does that make sense?
Okay. So again, anyone that works with me or has this card, last stop moving again, will give our clients a 5% discount off their fees. So we're trying to create, because what I've done is I've created a whole list of trusted service providers. These are people I know that give good service, fair pricing, and are going to take care of my clients, right? And all those people are accessible through here. Right now on the FindMyHouse.ca website, we're creating a directory of that right now, but it's still in the process of happening. So if you were to go to FindMyHouse.ca, if I can get my and you go about, they're the trusted service providers, and you guys are, so look, they're already up here, all right? Once we're all done, there's probably gonna be about 60 different companies out there, everything from electricians, if you have a problem, plumbing, pretty much anything you need, painting, roof, they're all gonna be found here, okay? Now, the other thing I wanted to quickly show you guys a little bit. I know that it was us on the survey, but just for my own curiosity, who here wants to buy a house within the next 1 to 3 months? Please put up their hand. 3 to 6 months. 6 to 12 months. Unsure. You're unsure. Okay. Here's what I want to show you. So have any of you gone to this site yet? Yeah. So here's a great place to go, and you can register. But I'll just scroll down a little bit and come to here. Why is it still loading? There we go. So this information here, you can actually select any kind of metrics you want, right? I can have median price, average price per square foot, days on market, but at this point, we're just going to leave it the median price. January in Edmonton, the median price was $429,900. As of yesterday, $439,900. That same house just cost you $10,000 more. So prices are on the rise. So the sooner you probably get into the market, well, we're going to save you some money, but you know, there's a lot of different reasons why people have certain timelines. Don't ever let the fact that you may be, I'm in a lease for another 6, 8 months before buying. Contact your landlord and says, hey, if I wanted to move out earlier, what penalties may or may not charge? Some will say, well, I don't care, just let me know, give me 30 days notice. Some will say, well, as long as I can find the renter before you move out, that's fine. And some will say, well, no, you have to give me at least 90 days or whatever. But find out what it might be Because if they allow you out early, you may want to take advantage of that. Okay?